under the name ABC. So the following was extract from their books of account. So we have learn at cost, building equipment, accumulated depreciation, all these receivables and payable, allowance for doubtful debt on 1st July 2023, cash at bank, capital account, and you also need to be more specific when they indicate on credit or on the debit. Current account, then and on the credit, debit, and on the credit. And then we have sales, purchases, staff salaries and wages, rent and rates, general admit, and the bad debt written off. So additional information, inventory was valued 16 to 20,000 and 1.8 million as far as July 2023 and 30th June 2024. So which mean the other one is opening stocks and the other one is the closing stock. The closing stocks.
Closing stock.
Yeah. So okay, number 2 is that on 30th June, rent paid in advance, that is a prepayment. Number 3, 30th June, general admin expenses accrued. So we have accrual. So far you need to know, how do we adjust for the prepayment? How do we adjust for the accrual? So we have done a lot of questions. If you have been given prepayment, it is you pay expenditure in advance. So you don't need to recognize it in the current financial statement. We have to subtract. The accrued, it is relating to the current period. It's only that they have not been paid. So we have to include it in the current period. The partners, yes, the partners made the following drawings during the year. Yes, we have the drawings there. Depreciation is given on a straight line basis. Okay. Allowance for doubtful debts to be increased to. So far, how do we do adjustment for the allowance for doubtful debts? So you have to check if it is an increase, it is an expense. If it is a decrease, then it is an income. So you have to get to know is all the adjustment. Now, balance due to earn was to remain in partnership carrying an interest until 30th 1st July 2040, which means the earned this is retirement of a partner. We have not been told up there, but maybe because of this information, it means that we might retire and so let's see. The value of the partnership goodwill as of that 1st December 2023 was valued 4 million and was not to remain in the books for the part of the partnership. So which means we have to open a goodwill account. On that 1st October and November, that 1st December 2023, the partners agreed to revalue the land upward by 3 million. So that is a revaluation. Assume profit accrued evenly throughout the year. So now the question is, who retire here? It is Anne. Anne will retire when? On that 1st December 2023, Anne retired from the partnership and left Ben and Chad. So yes, he retired on that 1st December 2023. When are we closing these books of account? 30th June 2024. So which means he retire 6 months prior to the closing date of the financial statement.
Financial statements.
Yes. But we have not been told to prepare the statement in a columnar format. But we will have to prepare it because I'll retire. So we will retain the other one. Even if we, so we will have it because of partner's current account. So we will have the first 6 months, and the last 6 months. 6 months.
Last 6 months.
And then we have the totals. So what we need here is the P&L. We need the P&L, profit and loss account, which we will start with the sales. So we have the sales value here. Now, the best way is to pick the total first, put in the total, divide by 2 because it is 6 months, 6 months. So we take this, multiply by half, which will give us that, the same value with this again, that one. We go to the cost of sales. Cost of sales. Cost of sales, we said we start with, it's like we're doing a discussion.
We start with the opening
Yes, opening stocks.
inventory, purchases,
Uh-huh.
then subtract closing inventory.
Good. So I hope you have mastered like that. So we start with the opening inventory, which we have been told here. Okay, let's put in values in thousand first. We cut the 3 zeros here and also have it here. Now we start with the opening inventory, which it is in additional information 1. This one, 1.62 million. That is our opening inventory. Let's put in the total first, then divide by 2. Divide by 2. I will just copy this, divide by 2. The same with this, I divide by 2. Oh, sorry. This one to divide by 2. Then you have said we add the purchases, correct? So this is the purchases we have. 58.20. We also divide by 2 to give us that one. Less closing stock. Closing stocks.
Closing stock.
Yes. So our closing stock is what we have it here, 1800. I've cut 3 zeros, so that is our closing stocks. Also divide by 2. Now this one is a minus because it is closing stocks. Then this one is a minus, or we could have taken that just a minus the other one, and then this one will come. It will be very easy. Good. So this is, if you add these 3, we will get the total cost of sales. Cost of sales.
Cost of sales.
Yes, total cost of sales, which will be these 3. That one is our cost of sales. Cost of sales. So with this cost of sales, I will subtract my sales to get my gross profit. This format, you should know. Imekwambia, if I meet you in the road and ask you the format of profit and loss account, the format of balance sheet, the format of cash flow, should be able to describe. So I'll take the sales minus cost of sales to give me the gross profit. So this is my gross profit. We said we add other incomes, like the investment income.
Gross profits.
If you have the investment, I'm just mentioning because it is just a remembering, investment income you will add. If there is a dividend received, don't forget also dividend received. And then if there is any decrease in allowance for doubtful debt. Doubtful debt. Yeah, that one. So all these are the major incomes. We also have the rental income, rent income. So if you find any of these, add it as other incomes. Other incomes. We might not get it in this question, but I just need you to remember that. So after this, we less the expenses. Yes, we less expenses. So, and I always insist for expenses, start with the additional information so that we don't forget. So we go to the rent and rates. Rent and rates, there is a prepayment. So we will take whatever we have been given in the trial balance, which is, we have rent and rate, they have paid 500. we will subtract, sorry. We will subtract what they have paid as a prepayment of 100 so that we get the actual expenditure to recognize for the year. We can't put it in the total year. Also, we will accrue this one evenly. We will accrue again evenly. So if we subtract this, we're getting 400. So I will also accrue evenly. This divided by 2. The same, this divided by 2. I will do it all the way here. Now, the next payment expenditure is a general administrative. So we have general administrative. The value of general administrative in the trial balance is 284. Now, 284, we said add what is for the current year, but they have not been paid accrual. So we add 288 to give us a total of that one. So if you divide by 2, you will get this and get this. What else do we need to capture here? These are drawing depreciation. So we go to depreciation. So you can see even we have not spent even some more minutes. So if you know the format, then it will be very easy. Now it is difficult when you don't know the format. Now, depreciation 2% on a straight line. When we say 2% on a straight line, which value are we going to use?
The exact value, exact price.
What does it mean when it is extract? Is it the cost or the net book value?
The cost.
The cost, good. So we are going to use the cost. So the cost of building here is 6.4. So this one will give us the depreciation charge for the year. So if you divide by 2, you will get that and that. Now we go to another depreciation, which is equipment. So we go to the equipment. Equipment 15% on a straight line again. Then multiply by the value of the equipment, which is 960. So don't fail me with these exams. So kindly master all this format. And then because we have done it more than 7 times. So that one, if we divide by 2, we are going to get this one. Then now allowance for doubtful debt is to be increased to. You have to be keen, not by, but to. So there is different by, which means that is the exact value you are going to put in the P&L. But if it is 2, then you have to get the different, right?
Yes.
So let's get the
Please.
increase, the increase in allowance for doubtful debt. In this case, we have been given the exact value. So let's get the increase, which will take the 48. Remember, I've cut the 3 zeros. So I will take the 48 minus whatever I have it in the trial balance, which is 42. 42. So minus 42. So which means there is an increase of 6. There is an increase of 6. Okay. Again, I divide by 2 because we are accruing. This one should be on this side. This should be on this one. Don't need this. Okay, good. Which are the expenses? Balance due to the aunt. That is goodwill. That is revaluation. Assume the profit and loss accrued evenly throughout the year. So when they say accrued evenly, you divide by 2. So we have exhausted the expenses in the additional information. So let's go and pick whatever we have left out in the trial balance. We have the staff salaries and wages with 1172. We have rent and rate. We have adjusted that. Bad debt. This one we have not adjusted for the bad debt. bad debt 18, and then what else? I think we have exhausted the expenditure. So get the total. Get the total. Get the total of the expenses. Yeah, so that is the total of expenses. Get the net profit by taking this minus this, giving us a net profit